So in today's video, we'll see why and how price in stock market changes. So you see, like stock market is nothing just like a huge auction going on in a digital format. Here buyers and sellers compete with each other based on their emotions or sentiment about the stock. Buyers place bids, which is the price they are willing to pay, and the one with the highest bid takes the stock. So suppose there are two people wishing to buy a stock and one places the bid at 100 rupees, another at 101. So obviously stock will go to the person with the bid of 101. So you see, again it's all about demand and supply, and anywhere price of something, some commodity is included, it always will be about price and demand. I mean demand and supply. So demand in stock can arise because of many things, like if some good news, some good results, good future aspect of a company comes in front of investors, then they surely are going to rush to buy that. So demand can be triggered by that thing. And you see supply. Supply can be when maybe the sentiments turn bullish about a stock. You mean, I mean like some bad news comes about a stock, the results are not good. The management faces some criminal allegations, then people will rush to sell it, and this drives the price down. And why this drives the price down? You'll see the next slide, because that's how the price settlement order matching takes place. Basically, this is the principle of price settlement. That is, best buyer meets the best seller, and who is the best buyer? Best buyer is a buyer with the highest price. Bestseller in this case is the seller with the lowest price. This is the main criteria for the order settlement. So now again, in case of supply, now again first order will be of that seller who is placing the bid at the lowest price. Okay. Now we'll see there is a term known as market depth of every stock. You can see on any trading terminal. So like let's see of this is of LNT. So best seller we were talking about now. So you see first price is 3466.25, then 3466.40. So the seller with the lowest selling price is being placed in the first slot, and the first slot is the one that gets executed first. That is, in order to get your order selling order executed, your order needs to reach the first slot, then only it will get executed. Similarly, for buying, the best buyer is the buyer with the highest buying price. So you see this 3465.15, then 3465.05. They are in descending order basically. So here also the order in the first slot will get executed first, then this, then this, then this. So suppose people are wishing, you can say like few people got saw some good thing in a stock from any aspect, you can say they'll come to buy. Now they'll compete against each other, because everyone will be wishing to offer a bit higher and higher and higher in order to back that stock, so that they can, you can say, earn the profit or just ride the, you can say, the upcycle of the price. So everyone will try to come into this first slot. The first slot get executed first. So this is the best buyer, this is the best seller. And you see this thing 346.115. This is the last trading price. Why is it called the last trading price? Because, as you know, the name suggests, this is the price in which the last trade of that stock took place. Okay. Now suppose there is, you can say, bullish sentiment, or just simply just okay, like there is a lot of demand, so buyers will be placing bid higher and higher and higher now. So obviously the price will obviously go higher and higher and higher, and it will, as it will meet or match against the seller, someone who is selling at that price, the buying price will get executed. Similarly, for selling, you are in slot one, as it will match with the some person who's wishing to buy at this, it will get executed. But for both the cases, you have to come into this first slot. And just note that there are basically, you can say broadly, there are two types of orders: limit and market. Market order is like which whatever the LTP, last trading price, that is 3465. In this case, whatever is the last trading price, your order will basically get executed, or basically you can say the trading terminal will place your order in the first slot. If you are wishing to buy, you are placing a buy order. You will be placed in the first, and your order will get executed instantaneously. Similarly, if you are selling and choose the option for the market order, you'll be placed in the first slot. That is, you automatically will be selling at the lowest selling price in the market of that stock, and similarly you'll be buying at the highest buying, you can say, bid offers. So that's how the things work, and that's how the price goes up and down. But down, you need to see na, okay, if you can say some allegations have been imposed against the management, so people will rush into selling, and in order to sell their stock, they have to place the lowest order. So people will try to go lower and lower and lower for their order to get executed, and this will result into the stock price going down and down and down. Yeah, that's it. That's how things work. All about demand and supply and the working, the order matching. Thank you.